I want to talk to you about macro around the world, but let's start with the UK because we were just talking about it. You have a substantial operation in the UK. What is the confusion in the marketplace, this fits and starts, doing to your business over there?
It's great to be back, David. What a day. What a year, actually. So I'd say, yes, we are a big lender in the UK. We're one of the top mortgage lenders and with a very low risk portfolio, 40% loan to value. But clearly what is happening in the UK is affecting consumers, is affecting businesses. But I'd say the world is living through a period of, I'd say, unprecedented economic stress added by, with the geopolitics and the national politics. What's really difficult at times like this for governments, but also for businesses, is to get the balance right between what's urgent and important, which is fighting inflation, but at the same time, making sure we're laying the foundations for growth. And of course, fiscal policy has to be aligned with monetary policy. And I think that is the balance that was not right in the UK. That's what markets were telling us. And at the end, it's about, and I'm very pleased by the steps that have been taken. I think it's important to give stability and confidence as much as we can, not just to markets, but to consumers and businesses. We're a big investor in the UK. I have high confidence in the strong institutions of the country. It's a very attractive place to do business, attracts talent from all over the world. So I think, the steps taken are in the right direction.
You talk about the global situation economically. I know you just come from Washington. You attended those IMF World Bank meetings. Give us a sense of the perception at Banco Santander of where we stand globally right now, because we have a lot of inflation around the world. We have a lot of central banks raising their interest rates, slowing economy, and also a war in Europe. Well, how does that all come together? Because IMF is worrying about the possibility of a recession now.
Well, we're at levels of inflation we had not seen in decades. And we're also seeing government debts being at very high levels. So again, what's important, and this has profound implications for our customers, for consumers, for businesses, for society. And so getting that inflation down is really important. And, I like to say this is a disease that requires antibiotics. It's not going to be cured with vitamin C, right? And of course, you have the conflicting fiscal policies, and that's happening in many countries. And so making sure that they're not going one against the other is important. Coming from Washington, and of course, as a leader of a bank, I can say that this crisis is very different from what we had in 2008. We have a very strong global financial sector. This is incredibly important. As we've shown during COVID, banks have been part of the solution. We have 2-3 times more capital. Just Santander, if you look at the last 5 years, we've taken our core capital from about 8 to 12% and increased profitability from 9 to close to 14% ROTE. So, we're ready to support our customers, as is the banking sector, through what is going to be tough times.
How are you preparing for those tough times? Are you taking bigger reserves against the possibility of some defaults? I mean, whether it's in the United Kingdom or back in the United States or Latin America, for that matter.
Well, now that you mentioned Latin America and emerging markets, but specifically countries like Brazil and Mexico are in a much better situation than they were in the previous crisis. So typically, the current thinking is emerging markets higher risk. Actually, these countries have less debt, have followed prudent fiscal and monetary policies, and actually one of the few currencies that have strengthened against the dollar the last year are the real and the peso. They're up 5% against the dollar and much more against the euro. So, what we have done to get ready is what I just explained in terms of the numbers. In our case, we have the scale globally, but in market to be competitive. We have strengthened our balance sheet in a very significant way, and we have been very close to our consumers and customers as we have been during COVID.
Talk about consumers, because consumers drive so much of the economy, certainly in the United States, but elsewhere as well. What is the state of the consumer? How strong is the consumer from your point of view? Are you seeing any drawing back by the consumers?
So I think when I was here in April, I said the consumer was still strong. There is, at the high level, consumers are still doing okay. Savings is still there. However, there are, as I said, inflation has profound implications for businesses and people. And those that are, the lower income and the more, smaller businesses are already starting to suffer that. And that is why it's so important to bring inflation down.
As we face this set of challenges, I'll put it that way, around the world, what role is the strong dollar playing? Because the dollar is very, very strong right now. To what extent does there need to be more swap arrangements, things like that, to make sure people have access to dollars?
So the dollar, of course, is driving imbalances. Clearly, Europe is suffering from that, importing inflation. To me, the best example I've seen is central banks in Brazil or Mexico raising rates to 14% earlier this year, ahead of the Fed. This is really important because this means that they're not importing inflation. Actually, to me, if you look ahead, Brazil and Mexico are expected to grow more than the US next year. And by the end of this year, we'll have 5% less inflation than Germany. Okay, so that is a very different situation. And so, the key here is having your public finances in good order. This is obviously not easy for many countries, but some of these countries have managed that. And that is the best way to get the economy back on a sustainable growth once we have tackled inflation.
Anna, in the past, you've talked about expanding in the United States. You're substantially in the United States, but even expanding. Are you still on that path, given all the challenges that we face? Does it still make sense for Banco Santander to be expanding? And is acquisition in the cards?
So no acquisitions in the cards. We did invest $3 billion during 2021. The U.S. business that we run is a very different one from our international competitors. In the consumer space, we are at-scale lender. We originate assets profitably. We fund those assets with retail banking deposits. This is a sustainable business model. It is similar and actually competitive with the at-scale consumer lenders in the United States. And the proof is in the pudding, right? So last year, we delivered above 20% return on equity. We are on track to meet our medium-term goals, but also this year on track to be around 20% return on equity. So these are, this is a great business that leverages on the group's strengths in auto.
Just very briefly at the end, is inflation hurting your bottom line? I mean, because you have increased costs too.
So look, we've had negative rates for 5-6 years. That is not normal. We're going back to a normalization of rates, and this is actually how the system should work. So net, banks, will have higher earnings. We'll also have some higher credit costs, but net, we should do better.